Hey everyone, welcome back. We've got a really huge week coming up with some charts setting up for big gains, some for big losses, and most importantly, SPY setting up with some absolute monster premium in the options market. Historically, this is also a very bullish time of year, so let's look at the market forecast first, then we'll check out some crowd favorites. Feel free to jump ahead using the YouTube chapter markers. And quick disclaimer, this is not financial advice. This is for educational purposes only. This is how I'm reading the market, managing my own portfolio, and thinking through trade architecture. Please hit subscribe to follow for more. And thank you so much to everybody who's already subscribed. Now let's jump into the weather forecast using SPY as a proxy for the market. And so we're going to start with the monthly, the weekly, and then go down to the daily here. On the monthly and the weekly, not too much to say. We're still in a bull market in a super uptrend. We're above the 20 simple moving average, the 50 simple moving average, and the 200 simple moving average. And those are in order, meaning the 20 is above the 50 is above the 200. So everything's looking bullish here. We are starting to consolidate in the upper range of that, which if you look at it on lower time frames, starts to look like a bull flag. But I would really want to see a true breakthrough there. And I know I have a lot of lines here. I'm going to show you on the daily how we can use some of these fibs, including the fib extension tool, if you guys aren't too familiar with that, to see where we could be going, see if that lines up with some expected moves, because we can see what the expected move for the week is and use that as some levels for our intraday trading if we're going to be trading SPY, or at least to inform us where the market may be going for our other trades. And if we go and we look at the weekly, same thing is happening here. We're above our moving average stack, and the stack is in order. We are consolidating for what looks to be like a bull flag, and we are in the upper bounds of our fibs, and these are fib extensions at the moment here. And I'll show you a different fib extension that we're watching. But the only thing I would want to point out, I pointed this out on Friday, is we're getting quite extended from the 200 simple moving average on the weekly, which I watch a little bit closer to see when we might have a pullback, because I think a lot of people are expecting a pullback down back into the 700. And we'll see it more on the daily. This is just telling me that we're extended. And then daily, I'm going to start to look in to it a bit more to see when this pullback may be more likely and what the level is. Because again, this was quite a run. I think everybody's aware of that. So in instances like this, I'm looking for some type of, essentially it's a breakout retest. So we had this huge breakout, and I'm going to show you on the daily why I think this is also likely, but we had a lot of compression here. So this range was chopping for a very long time, and that type of compression is usually followed by some type of range expansion. If you remember back then, at first it broke to the downside real hard, but then it recovered and broke up to the upside. And that's not uncommon from this tightening range and then a breakout where volatility expands and the range also expands. So that's it on the weekly. If we look at it on the daily, I think we can elicit a little bit more from what's actually going here. And so on the daily, and I'm going to go down to, let's look at it here on this chart, slightly fewer lines. And let's talk about a few things, but we're still seeing this tightening range here. It looks less tight when we're zoomed in like this, but that matters because, as I said, the compression usually leads to expansion. And what I'd like to say here is, I use the super trend here, and a lot of times that's to tell me what trend we're not in. Essentially, I don't think we're in a strong uptrend, but we did just break a localized downtrend. So if you're looking at this from here, now we're starting to have higher lows, higher low, and we've broken above that 750 mark that I was talking about so much the last few weeks, because there was a ton of premium there, and there was also prints on dark pools for that. But what I've noticed recently on the GEX is that there's now a huge amount of premium, $10.8 billion at the 755 mark. So if we look, where did we close here? We closed right at that 754.95. So I think we were coming into that call wall and we were seeing some dampening. So like I said in Friday's video, what I actually want to see is a break above and then a retest. And on Friday, I was still looking at the 750 because there was so much premium there, and there was also a huge dark pool print there, that what I wanted to see was I wanted to see a break above it, a pullback down into it, and then a continuation to the upside. And this wasn't quite enough for me to say that I'm going to be going in YOLO on SPY. Instead, I'll be looking for some pullbacks as a place to maybe either sell some cash secure puts well below the market, or to say that maybe this is a good time for some of my other plays to be adding to them. And so let's go down now to the hourly to see what else we can can elicit there. Because on the hourly, we have just this kind of running structure. It was relatively bullish all throughout. In fact, if I go to the 4 hour, and what I actually like to do on this, and you'll see it even more when I get rid of the extended hours. So I'm going to turn off show extended trading hours here. We just have continuation. There's very little pullback. The structure is just bullish. It's kind of what you almost call a lockout rally, which is one of the reasons why I think this candle got bought up. So this is when Trump tweeted about Iran, ceasefires over, that kind of thing. It got bought up immediately. And two things to say about that. First is it came back into the 20 simple moving on the 1 hour. So I don't think that was surprising because it came down violently. And so for that getting bought up, and it also fell below this line right here. This is the standard deviations away from VWAP on the daily. So my VWAP is starting at the beginning of the day and continuing. So when we had this kind of flush, it wasn't surprising that got bought up. It also wasn't too far from S1 on an otherwise bullish day. So sometimes there's that mechanical effect here that the market makers are buying this up. Plus, like I said, we're getting pulled up towards the upside in general. But the other way to understand some of that is that the news headlines aren't pulling it down. And so I take that as a sentiment indicator, and it either means that somebody knew something or essentially that the worst is over with the Iran headlines. And I think that's not an odd thing to say. I think there's a lot of consensus around that online in the trading communities in general. So it's not an odd concept, but it's also not a tradable concept for me. Instead, what I like to see is that we pulled back into this fib extension. So let me talk about the fib extension on the daily here. So I know a lot of people know fib retracements, but I'm going to go ahead and draw a fib extension. I need to actually delete this here, and I think this may be it. So you guys can see it. Let's remove that drawing. Yeah. Actually, I believe it's this one. So now I probably removed some drawings that I didn't want to. But in Thinkorswim, you could do this in other programs. If we actually go to the fib extension here, right, so we're going to go from our low here all the way up to our high, and then we're going to retrace to either here or here. I'd like here, this is our low on this bull flag. And now it's going to show me the extensions that are most likely. And what I find really interesting about Friday is this was already a known line. We already had this huge wick candle bounce, and then we reclaimed the 20 and the 50 simple moving average on the daily, which is really wonderful in general. It's almost like the damage wasn't quite done, and this will be our next leg upward. And we pulled right back into this 23.6 fib extension, almost to the T here. So to me, that's even more compelling than the news in general. It's why I was saying that sometimes this is more mechanical, has more to do with the flows, the option market, and technicals than it does with the news headline. The news headline is just the catalyst to get us to some of those levels. So based on this, what I'm looking at next is a break above the 260, but confirmation towards the 767, 766 before we hit even more resistance up there. However, as I said before, for me, the juice isn't worth the squeeze up here. If we're trading at 754 and maybe we're seeing a move up to 760 before we hit some resistance, and then if we see some acceptance, maybe up to 767. Now, that's not to say that I don't like this and it's not bullish for me in general. What it's saying to me is that this instrument might not be what I want to trade, because that is a massive move, but you need a lot of leverage to really capitalize upon that, at least from my trading style. So I'm more likely to be looking at names that have been underperforming the market, that have some other signals, but saying that we are seeing some bullish signs here. And I've been talking for a while about how I don't want to play all of this chop. And I don't necessarily, but I do think that it is very likely that there could be some bullish upside, even if it is somewhat dampened. And then the other thing I want to talk about real quick before I'm off the weather forecast here is just about the expected move. So you can calculate these using the at the money straddle, but if you have Thinkorswim or other programs, you can just go ahead and look at the expected move right here. So plus or minus $9, and this is for Friday's expiration. So this is the weekly expected move right here. $9 over here would bring us to 763 essentially. Let's call it 764. See if there's any confluence of price going on there at different levels. Not too much, but it's between R1, R3 and R2 for the daily. But if we mark out that level there, that would be roughly where I'm expecting to trade into. Again, not enough risk reward or not reward to risk for me. And to the downside, if we're $9 below that, that's going to take us down to 745. And 745 actually does have a bit more confluence there. 745 right here for tomorrow or Monday's open is the S2 level. And I do kind of like that because that's going to catch up probably with the 20 simple moving average on the daily. So that is a level that I'm watching. It also looks like it's some previous support right here. It was resistance. So that's a level that I'm watching. Essentially what I'm saying is that I do see some bullish upside being a potential for this week, but I don't want to play a continuation. I want to play a pullback into an expected move. So somewhere around 745 before I'm starting to look to either sell cash secured puts below the market or maybe some swing longs, or more likely I will be going in a little heavier on some of the plays I like that I've been covering on the channel. However, the other thing to mention here on the weather forecast is on the VIX. So the VIX now, as you can see, is breaking down and we closed at 15 on the day on Friday. This tends to be the complacency zone, as you can see. A lot of times when we get down there, we either chop for a little bit, which I don't think would be odd for this part of July, but then we start to expand. And you see this huge downtrend right here. If we can start to consolidate, as soon as we start to hit that around 16, I'd expect some upside volatility. And I think there's a lot of consensus in the market as well that going into August, we may see some of that. It's a midterm year, so I am starting to do that. Let me know in the comments if you'd like to see some year-long forecasting, because I actually, at the start of the years, I will mark out the expected move for the year. I'll start to mark out some historical cycles, pardon me, historical cycles, and some of the Fed data to understand where we could be going for the year. And also when it's more likely to have expansions, pullbacks, and contractions, as well as some larger levels that I should be looking out for when I'm planning out my thematic trades, but also larger market regimes. Before we get into the rest of the charts, this is a pretty important macro week. On Tuesday, we get CPI, which is a big inflation print. On Wednesday, we get PPI, the Empire State Manufacturing Survey, the Fed Beige Book, and Fed Chair Kevin Warsh is testifying to Congress again. On Thursday, we get retail sales. Let me scroll down here. On Thursday, we get retail sales, jobless claims at Philadelphia Fed Manufacturing Survey, pending home sales, and business inventories. And then on Friday, here we go. Yep, we get the import prices, housing starts, building permits, industrial production, and the preliminary Michigan consumer sentiment number, which does often tend to lead into a trending day. So the market has plenty of catalysts this week: inflation, the consumer, housing, manufacturing, Fed commentary. And then there's also a lot going on for earnings season. There's a ton of financial names reporting, which is really important to understand for flows in general. But also ASML, TSMC, and Netflix, as well as a few other major names. And ASML is a big one I'm watching because, chips have really been leading the market, and it's going to be an interesting one, not just for them, but also for the CapEx in the mega cap names. All right, now let's look at the Magnificent Seven. We're going to look at MAGS, which is the Round Hill Magnificent Seven ETF, but I'm sure you guys already knew that. And it's really important because the trade of the last few months has been MAGS versus SMH. And I'll cover SMH as well. But essentially, one day the Magnificent Seven is down while chips are up. The next day, chips are up while the Magnificent Seven is down. And the trend has flipped. And when the Magnificent Seven basket starts repairing, it changes the whole tone of the market. It doesn't mean every single stock in the group is perfect, but it does tell you the market is willing to reward mega cap platform companies again. So now the question becomes, is it just the bounce in the index leaders, or are we actually seeing sentiment repair underneath the surface? And I'll go into some of the individual names, but first I just want to look at the Magnificent Seven. And the first thing to notice on the daily is that we are above the 200 simple moving average, and we just reclaimed the 50 simple moving average on the daily. However, the 20 still has to repair. So I would expect a little bit of consolidation here before a huge bounce to the upside. However, the trend is bullish for me at the moment, and it's respecting the Fibonacci retracements. Essentially, we drew it from down here in the end of March all the way up to the highs during that first pump. And I don't know if you all remember, this is right around when Microsoft started falling right here towards the end of the month, but this is the upper bounds it couldn't break through. But we did come back and we traced to the 618 almost to the T, and we came back up, reclaimed the 38.2, and then on Friday we reclaimed the 23.6. A lot of times I will see some type of pullback back into the 50 before we continue upward, shake out some of the people who got in around here. But all things are looking relatively bullish. The RSI is pointing upward and is above the 50. So I am liking that. We have a crossover on the MACD, but we're not above the zero line quite yet. So there's probably some consolidation that will happen there. And if we do get rejected here, I could see a bit of a rollover. But essentially, I wanted to look at this to see what is the sentiment here. Has it been repaired? Are we seeing some inflows into the broader ETF, into some of the safer ways that people invest in that? And I think the answer is probably yes at this moment. Now let's look at SMH. The first thing I want to look at is overhead supply, and I'm starting to see some overhead supply about around the 610 area, and we're below some important moving averages. But right now we're below the 20 simple moving average, and the structure has a potential head and shoulders look to it. Again, potential, left shoulder, head, right shoulder starting to form. But essentially all we're saying is that we are starting to see some resistance above. We tried to break above and failed. Any way you want to say, we don't always have to look at head and shoulders. The pattern just shows us that we made a high, we made a higher high, it failed. We came back, we retested that to try to come above, that failed again, and so now we're below that. That's all it's saying there, essentially. And it is a great reversal signal, but you don't need to think about it as a head and shoulders always, especially because sometimes it's quite sloppy on charts like this. However, we're also, like I said, losing the 20 simple moving average. And when that happens, I become a whole lot less bullish on it. I don't necessarily go shorting it because SMH has had a number of patterns like this where we go below the 20. In fact, the last time we came below it, I'm sure people were waiting for a much larger breakdown, but then we came onto this huge rally that everybody stumbled into. So you would have gotten your face ripped off if you tried to short it there. But for me, at least, this means that I'm not necessarily going long. And this type of volatility after a huge bull run like that generally means that the top is maybe not in, but a lot harder to say that there's upside past this top. And I think you guys remember when I looked at it on the weekly, we had some really ugly candles. You had this topping bar right here, and we were able to reclaim that, which I'm sure a lot of people were not expecting. But then we had this bearish engulfing candle right here. So two of these topping patterns, and then another pin bar there pushing us down. It's tried to reclaim it, but I wouldn't take this as the gospel. But either way, I'm also watching what's going on ASML on Wednesday, which I think will be very telling for the whole space, because ASML is not just another chip stock. It's one of the most important companies in the semiconductor supply chain. So what they have to say about demand, orders, EUV, customer behavior, and CapEx spend will help inform how we think about the entire AI infrastructure trade. So I think that's enough for SMH for you guys to understand where my head is at with it, and particularly as it goes with the mags looking a lot healthier than the SMH. All right, now let's look at everybody's favorite, Microsoft. And we've been watching the GEX very closely, and call flow has been great. But most people are probably waiting for the stock to push back above the $400 mark, which, to be honest, I think makes a lot of sense for traders who are a bit more trepidatious. You're not going to miss out on a lot of the run that I'm personally expecting if you wait for that to happen. I'm just building longer term positions here because I have more conviction in it. Just to recap here, we had this bullish RSI divergence that happened a few days ago, maybe about a week and a half ago. We really liked that play down there. That was a signal for us to get in, and that maybe this was more of a spring than some of the other moves that we saw previously were, because it happened with oversold bullish RSI divergence, which is really strong for the system that I ascribe to here. But waiting for it to clear the 400 would do a few things for you. First of all, that's a psychological level. Second of all, you would break out of the super trend downtrend when you hit that. So I would like that. But I would also say that if you do see it break above 400, there's two risks. One is a lockout rally, and I've talked about that a lot, which essentially you're going to have a hard time getting back into that, which may not be a big deal if you're willing just to buy into it and you're okay with the price action. But waiting for a pullback sometimes becomes tough on that. But then the other thing is, because personally, when I see a level broken, I like to see it come back and retest that level and reclaim the uptrend with some strength. So those are harder if you're looking for those signals when you get a lockout rally, which often happens when you have this type of compression. because this doesn't look like a range to some people who aren't used to trading such large nominal cash value names. Essentially, when it's trading in the around $400, a price movement between 400 and 350 really isn't that big of a deal. And so it doesn't feel like consolidation to a lot of people, but to some institutions with larger time frames, this type of consolidation really isn't that big of a deal, especially happening over the course of a year with a company that has great expanding EPS and revenue. Which takes me to the next topic I want to talk about, Microsoft, which has to do with EPS growth. This is a huge topic, but it's a core part of value investing. And for a lot of quantitative traders and investing-minded retail traders, it's one of the keys to creating generational wealth. What I'm showing you here is my EPS Growth Line tool. And essentially, you can find similar charts on other websites, and you could do it yourself even once you understand what's going on. But since I run my own quantitative trading desk, I have my own tool for it. But essentially, what it does is it compares the stock's price against the company's earning growth by anchoring the chart to historical EPS, which is known, of course, applying expected EPS growth, which is projected either by analysts or the company or both, and then visualizing where price would be if the market continued valuing those earnings consistently. This is not a guaranteed price target or traditional CAGR model. It's a relative valuation tool to show whether price is stretched above or below earnings growth. So let's actually put in Microsoft there to see how it's working. You can see it's actually not quite as complicated as that made it sound. So let me launch the chart here, and we can see it plotted out. This is the EPS growth line I just described, and here is actual price. And with Microsoft, this is where it gets really interesting because Microsoft is very extended from its EPS growth line right now, but in the opposite direction. Most people usually mean when they say extended, this is below. So price is well below where the earnings growth line would suggest it could be if sentiment were normal. So essentially at this point, what we're really trading is sentiment. As soon as sentiment gets repaired, price can recover massively. But the downside does seem to me to be likely mitigated, essentially, not just technically, but fundamentally because of how stretched we are below the growth line, the EPS growth line. Of course, that is not the only thing that can play out. There can still be more downside. But as we've been watching here, we have some tradable swing lows there. And that's why I keep coming back to the idea that Microsoft doesn't need some kind of miracle. We just saw it on the EPS growth line, how far it already is extended. It doesn't need to reinvent the company. It needs a very few specific things to change the valuation story. Essentially, investors need to believe AI is strengthening the moat, not just increasing CapEx. They need to see Azure and Copilot monetization continue. They need to understand the security and agent story better, and they need management to communicate the story more clearly. I did a video a while back about the very small things that Microsoft needs to do to hit the upper bound of the analyst price targets. So if you want a deeper version of the thesis, go back and check out the video. I'll leave a link somewhere on the screen here. Now let's check out Meta because there's a bunch of things I want to talk about. And the first thing is in regards to what we just saw on Microsoft, because I think Meta is probably showing us what could happen with Microsoft. I'm not saying it will, but so on Microsoft, you had this low. This was actually the bullish RSI divergence point right here. And then we started to reclaim some of that. Now we've been consolidating, chopping around for a few days there, right on an important fib level. Well, Meta did something very similar to that. It came down, granted, this wasn't bullish RSI divergence here, but it was now a higher low from this point, which is a different type of bullish pattern. And then we started to reclaim price and it started chopping around. And then the sentiment really picked up. See, we did have some news right here. We talked about that. That was when they started saying they were going to sell back some compute, start a cloud business to sell it back. And then this was the big news there, either on the foundation model, the chips announcement, or more likely a combination of both, and or sentiment just changing and the domino chips starting to fall, essentially. So what I'm saying is this is what a sentiment repair looks like. And if you were to look back on Microsoft, I would assume something similar could happen. You could gap up above the 200 simple moving average. Not saying it will happen, but it's something I'm looking for. And you guys know me, I tend to close a lot of my long call options once I have a catalyst like that and capitalize upon the delta expansion and the IV expansion so that the premiums jacked up, take off some of my profits, leave some of my longer term shares as runners, that kind of thing. So this is exactly what you saw on Meta here. And two things about this move. So the first is that you gapped up above the 200 simple day moving average overnight. And that's really really, really more bullish than a lot of people assume for a few reasons. One, the 200 simple moving average is like a regime indicator. It's a filter essentially for positioning, and a lot of funds trade that way. So once we're above the 200 simple moving average, they're more likely to have a long bias. So you can also see the sentiment in the technicals, which I really love. And then also a lot of people who had been either going short here, getting out of their positions, woke up to this massive move on Friday. Now, granted, it wasn't that unexpected because in the close on Thursday, we just had this massive push up into it. But I don't think everybody saw how likely this was to go up. We have been talking about the GEX, and if we broke 625, 650 was the next target, and we even pushed above that. So looking forward, what I would expect is some type of consolidation or pullback. And so what I want to point out here is this descending trend line on the daily from this top. Actually, it was a top from a swing before, all the way down. And this was essentially some kind of neckline. I think you could see it there. If this was a left shoulder, this was the head, and this was the right shoulder, this would have kind of corresponded with a few things, either the neckline right here or just the daily downtrend on these swing peaks. And so I would kind of expect a pullback at some point into that level. And it would be a retest at that point probably of the 200 simple moving average. So I'm essentially looking for some type of pullback there. And I still have a lot of shares. As you can see, I have 100 shares in this account. I closed a lot of them, or I sold a lot of those shares. I didn't close my contracts because of that move. And so I still have 100 going there, but I'm looking to add a few more for some of my long-term portfolios. If we pull back into this breakout retest going at around 625, maybe up to 635 or even 640, I might start to dip my toes in the water, depending on the larger market. And then the last thing I want to talk about with that is, the growth line. So we just talked about the EPS growth line on Microsoft. Let's look at what it's showing for Meta, because it's also very compelling here to me. It's just loading a fresh one. Let's launch the chart there. And you can see that the target here is 778 based on the EPS growth line. What else I want to point out for this is on this chart, I also show the analyst price targets. So here's your high price target, which is over $1,000. The mean is 828 and the low is 664. And interestingly, you can see exactly where we closed price at 669.21. So not too far off from the analysts' expectations. So I do like the price action here, but just to clarify, I've been playing the move since somewhere in April, maybe a little bit later than that. So for me, this has been a profit-taking point for me anyway. And also, if you guys don't know, I run alphaharmonic.io where I map out these trades because it's really important to know where you want to take profit and where you're thinking about your second target for a take profit. Again, not financial advice, just how I'm doing it, but that's a website where you can actually plan out some of those trades. So now let's jump on to the next one. Now let's talk about Bitcoin. And I use IBIT a lot because it's a lot easier to see the institutional option flows. It's the most liquid ETF. And I think Bitcoin is trading a whole lot more like a standard equity than it, or even just a standard ETF, if you will, meaning that GEX is influencing quite a bit derivatives in general. I also look at the futures, but you could just look at Bitcoin on something like Kraken or Coinbase if you want. But for the purposes of trading it through our brokerage, we're going to look at it on IBIT. But first, let's talk about the sentiment, because Bitcoin is starting to look increasingly constructive from both a sentiment and flow perspective. The fear and greed setup is still not euphoric, which is actually a contrarian signal for me. I don't want to be buying when we're already euphoric there, but I don't want to be buying on declining, but we're starting to recover a little bit from the lows there. And then the other thing is that ETF flows have begun turning positive again after a really ugly stretch. Whales have reportedly been accumulating, and leverage positioning looks relatively clean rather than wildly overcrowded. And what's especially interesting is some of the sentiment, like in the news stories. And mind you, I don't have a subscription to these. I just wanted to pull up a few stories here. Bitcoin falls on speculation on the cycle bottom. And notice when these were. There's like 4 days ago. This was 11 days ago. Citicoin cuts Bitcoin. All of this stuff. Okay, so there's just all these bottoms. The bottoms are not being called, but all of these things are being put in. It starts to make me question if that is close to the bottom, essentially. All of the major good news tends to happen towards the top if we've already been uptrending. But since we've been downtrending for quite a while, let me zoom out here. When I start to see crazy news like that, I start to think maybe we're getting close to a bottom. And the other thing that I like to see is, of course, you guys guessed it, bullish RSI divergence, which we essentially have right here. And if that was enough, you can also see it and from here, a lot clearer, from here to here, price is descending, RSI is ascending. And I did say, like I said, I saw it on a larger time frame there. And we have fallen below a major support level here. We have reclaimed it. This could be a spring. I'm not saying it is quite yet. There's a lot of reclaiming that has to happen here. But as far as the sentiment being corresponding with bullish RSI divergence, I really like that as a contrarian signal to the upside. And like I said, I am also seeing a bit of a change in the way Bitcoin is being traded by basically everybody, but it's because institutions are now more involved and they're hedging with options and futures that it's influencing the price, and it may behave differently. Like I said, a lot of people are looking at the cycles and they expect a bottom to come closer to October, whereas I actually think they might be all fooled out and miss the bottom there. However, I'm not YOLO on it. I do have, again, not financial advice, but I play Bitcoin for a number of different ways. Futures are very good for this for me because I can see some of the nearer term price action that I'd like to play. Essentially, I'm just targeting this 200 simple day moving average to some degree. But I also, in a different account here, I have a lot of BTCI. And you can see it's down quite a bit, but we can cover this. Sometimes this is a NEOS covered call fund. So I'm getting paid through all of this volatility. And it's already broken even since I've held it. And you can see I'm down like a little over, getting close to $3,000 there. But it pays close to like 20% in yield. So it's actually a really great, it's as a hold when you don't know what's going on. We could become more constructive, and I've started to buy some individual Bitcoin linked holdings and Ethereum, but that's beyond the scope of this. Let's just go back to this other account where I'm holding, oops, not that one. You guys can see I trade a lot of different accounts here. Anyway, Bitcoin in general needs to do a few things though to confirm the bullish case. So from a technical standpoint, just to recap before I get into the specific levels there, I like the RSI divergence. I like that corresponding and being in confluence with all of this deluge of negative sentiment from the large banks that would benefit for people to sell the rest of their holdings here. And especially if we look at it on higher time frames like the weekly, we're coming back down into this previous accumulation zone. You can tell it's an accumulation zone because it's chopping around in here, and then we have a markup period where we break out of that zone, and the people who bought here make their money, then they sell it out. Consolidates again, it breaks out. And the thing I wanted to talk about though, about it being in an accumulation zone like that, where we have a little spring below it, if you see this as Wyckoff accumulation, where we're in this zone here, false breakouts come below, spring down, coming back into the range. If we start to continue to see higher lows from here, you'll know that's a bit more of a Wyckovian pattern going on there. But what I was going to say was Elliott wave wise, if you believe in that as well, we have that first impulse down, impulse up, impulse down, impulse back up, impulse down. And if we're lucky, now we're going to start to reverse trend. So there's a lot on the technicals that I like. And like I said, I've been seeing a lot of flows, both in the options market and then on chain, which you can get some of that information on a number of different places, but you're not going to find it in your brokerage. But for the bullish case to confirm, I would want to see Bitcoin continue holding the 62,000 to 63,000 area. Let me actually just go to, if I have it open here, right? This may be a little bit easier to see. And we are holding that, but I want to see that continue to hold. And we're in Sunday, we're getting close to futures opening. So depending on when you see this video, you might already know what's happening here. But I really want to see it continue to hold the 62,000 to 63,000 area and break through the recent 65 to 67,000 supply zone, and to do it alongside sustained ETF inflows. Because like I said, I'm watching that because that's how I think it's trading now. It does give you more insight into it. And I don't need a huge move if I'm playing futures for something like that, even just reclaiming from here upward. In fact, let me pull it up on the futures chart there. We don't need, I gotta zoom back out. We don't need a huge reclaim for that to happen. And here you can actually see what's going on. We keep bumping up against this retrace of the 23%, although it is probably lower now because we've swung below, but I actually love this type of double bottom action that we're seeing nice and clearly here on the weekly. Let me go back down to the daily just to be consistent with how we're seeing on IBIT. Yeah, so I want to see it reclaim the 67,000 zone and expanding ETF flows. But if the pieces started to align there, I think this 200 moving average is not as clear as it is on IBIT. I would probably want to see it come up maybe to this upper range. Even getting up to 67,000, 68,000 would be pretty compelling for me personally. So again, not financial advice, but since somebody asked how IBIT or Bitcoin is looking, just wanted to do that briefly for you. But of course, do your own diligence on it, but it's starting to look a lot more bullish to me. That being said, if we don't see the 62,000 area hold like we were just talking about, because I don't think it's all sunshine and rainbows up here, I think that we could see the next level being 54,000. And so this is like the next level. This is a Fibonacci retracement essentially. And this would be where you'd be likely to go if we blast below that 100% retracement. So I am looking at the 54,000 as like maybe some kind of swing trade. And I think a lot of people are looking down for the 46, because if we lose 50,000, there's going to be a lot of blood in the water. And the question is, where does it go after that? I like to rely on the fibs, and we could probably even, and that's just from when we started consolidation right here in this high, which could be a swing, because if you're looking at this as Elliott waves on starting at this point, you could have an impulse here. Well, this just doesn't reclaim it for me. The next one would be here. That would be your 2. We would reclaim and come back all the way down to 45,000. So I do like that as a potential location for the trade. However, like I said, that's kind of in isolation, because I think this is actually the last leg of a larger Elliott wave cycle. So that's Bitcoin for you there. So we are still seeing a lot of constructive rationale for a few of the stocks that we covered: CRM, ServiceNow, Oracle, Pfizer. So I'm not going to cover those today because we did a lot of it on Friday and not much has changed over the weekend. So if you want to see those in a real deep dive analysis and some of the trades that I actually put on for them, you can go back to Friday's video and check it out. I'll leave a link to it somewhere on the screen here. If you found this video helpful, please subscribe. It allows me to keep making these videos, and turn on notifications to get updates, and leave a comment with tickers you want me to cover next. I respond to every single comment. And if you like planning out trades like a quant, check out alphaharmonic.io. Thanks so much for watching. Happy investing, and stay safe out there.